Okay, everybody, it's me, Gregory Mannarino. It's Friday. It's lovely. Absolutely lovely. August 19th, 2022. People, you know I like to joke around. I joke around all the freaking time. But the MMRI today is flashing a warning sign. What am I talking about? Well, those of you that follow the Mannarino Market Risk Indicator, my email box is exploding today. Yes, we are in the orange. Slightly, but in the orange nonetheless. The next step is red, okay? So, yeah, we got a warning here from the MMRI. What are we seeing here? Why is the MMRI flashing a warning here? We are witnessing, yet again, people, instability in the debt market globally. Okay, what does this mean? What do we know is going on? Well, we have a monster engulfing the world. And I am not making this up. I am not being overly dramatic. We have a monster. It's this debt market hyper bubble. It's epic. It's beyond freaking imagination here. Let me just say this, people. There is going to be a moment in time when this debt bubble actually bursts. Is it going to change everything you think you know? Reality as you perceive it today is going to change in a nanosecond. Poof. That's it. It's going to be, again, just so unimaginable what this means when the debt bubble bursts. I mean, everything is going to stop. That's number one. Okay, I've warned about a credit freeze, a credit lockup, a systemic freeze for many years. It is going to happen. Okay. I don't think people grasp the gravity of the situation here, how grave it is. This is not going to be a phenomenon that affects one part of the world. It's going to be global. And the outcry from people is going to be so great. Again, what does it mean when transactions stop, the financial system locks up, no access to anything? Cash machines don't work, ATMs, no cash available from the banks, just everything ends. Okay. Now, for those of you that think this can't happen, it already did. All right. 2008 meltdown here. What was the real reason behind the massive capital injections into the market? It was to free up the credit markets. The credit markets were locking up. It wasn't really to stop the stock market from bleeding. We went from Dow 12,000 and Dow 6,000. Fed jumped in here with QE1. All right. No, it was to unfreeze the credit markets. Okay. Now, what would happen in this scenario? Let's say, for example, implosion in the debt market. Okay. We're showing some instability now. MMRI flashing orange. Please pay attention to the MMRI. It's free to everybody. Link in the description of this video. Save that page to your computer. You can reflect back on that. Keep track of what's going on. Understand? Okay. So with that said here, you got to understand that what will happen when this occurs. And it's a when. It's not if. It's when this is going to happen here and this whole thing just locks up. First of all, understand, this is not by accident. Okay, we are leading to a climax, a moment of maximum saturation, which I have used that term many times over the years. What does it mean, maximum saturation? That means, to me, I mean, this is the thing I made up out of my own twisted mind here, okay? When the amount of debt borrowed into existence exceeds its ability to make any freaking difference whatsoever other than its side effect, which is creating massive amounts of inflation, just like we're seeing now with emergency monetary policy by central banks, which is going on now to at least attempt to keep the debt market stable. How do they do that? They can't just think it. They have to make it happen. Central banks create more of their product out of thin air, adding digits to a screen, and they're in here buying the debt. Now, in a full-on meltdown situation of the debt market, central banks will have no power here. What will happen, again, they may try to attempt to stop it, but they can't do it because we've surpassed that point of maximum saturation, and all it would do would create hyper inflation. Forget about hyperinflation. We're talking about hyperinflation. So look, I think you get it. If you follow this blog, you know what's going on here. So what I'm going to say is this. Look, I could be wrong here, but I don't believe that they're going to allow the debt market to implode here. We got the midterms coming up. There's a lot going on right now. Federal Reserve credibility. I mean, do they have any credibility? It's laughable to me. You turn on Fox Business, CNBC, and they're talking about how the Federal Reserve has regained credibility because it's trying to fight inflation. Really? How about they missed their 2% inflation mark by exponents, right, 9% or something by their own numbers here, but that's okay. They're still credible. Now the Fed is trying to combat it by raising the federal funds rate, just nudging it, 50 basis points here, 70 basis points, and that's going to stop inflation. Really? No. How about no? You know it's not going to do anything. I know it. And let me tell you something else. It's starting to get attention. You and I have discussed that fact right here on this blog since its inception. We said it would not stop inflation whatsoever, but that lie is still being fist-fed to everyone via the mainstream media. But there are alternative sources here talking about how it ain't going to do a damn thing. What you can count on here is more utterly, totally asinine and ridiculous things like the Inflation Reduction Act spend hundreds of billions of dollars to fight inflation. Oh, why not spend $5 trillion? Then we'll have zero inflation. You see, they can't tell you these things, but you know what I'm talking about here. It's astonishing to me. Let me just, before we go to the market, so I'm just writing a few things down as I always do. So what do we find out this week? We're in a housing recession. Retail sales crater, inflation continues to surge higher, energy prices higher, natural gas at like a 2-year high, more companies warning on the economy, 50% of which say they will be laying people off in the not so distant future here, hundreds of billions of dollars in more debt this week alone, and it's not going to stop. And the MMRI Flash is a warning today. I think we got it. We know what to do. We know what to be looking at. You understand? 10-year yield, MMRI. Let's see what happens. The debt market is unstable. Are central banks going to do more? I want to hear from you. My belief is, and don't go with my belief if you have a contrary view, okay? My belief right here and now is central banks are going to do much more, okay? I said this in a video. In fact, I think that was the title of one of my videos just last week, that central banks are going to do more to keep the debt market stable here for now. They're not ready yet to pull the plug on the system to, introduce their new system. Believe me when I tell you, you know this, most of you, a new system is already in the works. It's already ready to go. They're going to introduce this new system when the public outcry is so great. When they're not done creating slaves to the system. You have to understand, they need people to be dependent on the system. The more people that become dependent on the system, the better off they're going to be here. The easier it's going to be to implement a new system with a lot more control. That's what it's all about, control. And it's also about depopulation, in my view. That's my take on it. You're entitled to yours. Less people are more easy to control, okay? Or more people dependent on the system. You understand? This debt bubble issue is not just a monetary problem. Let me say this real quick, okay? This is a completely engineered artificial environment. By pulling massive sums of cash into the now from the future here, by borrowing against the future, what this has done is created a human bubble, a population boom. If you were to look at global debt and global population, they have risen in tandem. What do you think is going to happen when the debt bubble bursts? You think the population's still going to grow? No, it's going to die off. Rising in tandem, die off in tandem. That's what's going to happen. Let me put another perspective on this. Let's say you're a chicken farmer, okay? You borrow all kinds of money to raise your chickens. You want to sell them on the open market, okay? You're borrowing. Your chickens are thriving. They're doing great. You're buying feed for them, and however you raise chickens, I have no freaking idea. I'm a city guy. You all know that, okay? But you're raising these chickens, and you're borrowing and borrowing to, raise more and more chickens. All of a sudden, your funds dry up. You can't feed those chickens anymore. You can't keep a stable environment for those chickens anymore. What happens to the chickens? They die off. Same thing here, but we're talking about human life. You understand? That's how it's going to play out, period. And the outcry is going to be biblical. And a whole new system is coming. A whole new freaking system. Anyway, going back to this market real quick before this video gets too stupidly long. As you and I expected, a pan sell-off today. Everything sold off. Cryptocurrencies got hit pretty good. Bitcoin around just over 21,000. I told all of you weeks and weeks ago, I want to see it stay above 21,000 for a while before I consider getting back in. This is interesting what we're seeing here. Silver got hit pretty good today. Gold got hit not as much. Crude oil was higher earlier, finished lower. But again, what is this all predicated on? Oh, the dollar, knee-jerk higher. Instability in the debt market. That's why you got the warning from the MMRI. I'm telling you what to do. Just click on that link when you finish with this video, or do it now. Save it to your computer, that web page. It's free, and you can watch the MMRI in real time, okay? Even if you don't want to follow the 10-year yield, follow the MMRI, okay? It's going to tell you what's going on. It's telling you right now we have a problem. Houston, we have a problem. Seriously. Stock market fell under some pressure too. All right, look, no surprise. Everything is going, I believe, the way you and I have expected it to go. But I want to hear from you, like I said. Do you believe central banks are going to literally allow the debt market to melt down right now? And are we going to see that 10-year yield rise? Are we going to see the MMRI go red? The MMRI has never gone red yet. If the MMRI goes red, it's time to run for the freaking hills, people. Run for the hills, all right? Right now, we're orange, all right? Turns red, what am I going to do? I'm selling it all. I'm going to dump it all. I'm going to tell you right now. But we're going to keep our eye on that, people, okay? So what are we going to do? It's Friday. It's my last video of the day. So we're going to do what we usually do, people. And look, what I'm going to tell you, I don't say this every week for my own health, although maybe I do. But look, it's just so important. Are you ready? Let's do it. We're going to do it together. Love each other. Care about each other. Be charitable. People, this guy here loves you a lot. I mean it from the heart. Think about these things in this video that I've covered. Ponder them. Comment here. What do you think about what I have said? Does anything here make sense to you? Does some of it make sense to you? Some of it's just so abstract that you think Greg Mannarino is completely out of his mind? Or does it make sense? People know the truth when they hear it. They know the truth when they hear it. It's I believe that's true. Honestly. All right. So with that said, you will see me on Sunday for my markets look ahead. We're going to have a lot to talk about. I'm sure about it. Have a great weekend, everyone. Stay safe, like I said. Care about each other. Love each other. Be charitable. And that's about it. All right. I'll see all of you Sunday. I'm out of here.